Afternoon. How are we all doing? Oh, hello. Cricket's alive already. Hang on. Shut up. How are you doing? Afternoon, David. Just been watching the DAX collapse ahead of the market open. So big moves down so far on this one for some reason. Not quite sure why, but we seem to have a bit of a sell-off going on at the moment. Same the Nasdaq as well. Yeah, same with the Nas. We've got a bit of a drop occurring at the minute. Useless trading chart. Agamat loaded. Let's make some money. Yep. Afternoon, Diamond. Yeah, always good to have a bit of Agamat. Afternoon, Nasir. So the moves we've had down basically on the indices, US indices, basically have just brought us straight back down pretty much to, why can't I draw? There we go, cancel. ADR on US dollar Swiss, pretty much back down to the open. Oh, US dollar Swiss. I'm along that. Shall I take that off? Discussions. Or do I go for the run? I've only got the target's only 5%, so that's 1.3 there, isn't it, with 2 trades? So we're up at ADR as well. What I might do with this, I'm just going to break even and stop it because we've got Powell speaking at 3. If Powell rallies the market, we're going to get a big ADR today on the US dollar. So might just cover that just in case he dumps the market this afternoon. There might be enticing longs to dump it, so we'll see. Afternoon, Michael. When you can, to remind you of doing a session on aggressive drawdown control. I'm way ahead of you. Way ahead of you. We'll run through that in a bit. Let's just watch the market open and do some analysis to start with. CADs and drawdown. Yeah, if that dumps, the CAD will probably pop as well. So we'll see on that one. Right. So this morning, obviously, we've had all ADRs. We've got a weekly look. We're only on Tuesday. Euro odd has already hit its weekly range. Look at that. Good short opportunity, Euro odd. Weekly range hit on a Tuesday. It's massively extended as well, isn't it? I love that propulsion gap. I'm short Euro CAD. I kind of like that as well, that Euro odd. What's that? About a quarter of an ADR stop. Do I want to bet against the Australian dollar at the minute? It's a big old risk reward, that. Give it a bit more breathing. I'm going to go short on the Euro odd as well. 0.16. Back into propulsion. I like that. Right. So yeah, Euro odd, massive extension on ADR. Well, not massive, 125 on ADR, close to 150. We've hit the weekly range already because we've had 2 ADR hits on the trot. Look, 2 ADR days in a row. Exhausted. I'm going to pull back. If it pulls back 50% into that propulsion gap, I shall be out. That's the trade. Afternoon, AZ. Afternoon, Fanor. So just going to watch basically the open on the Dow this afternoon. So the other ADRs we've looked at this morning already. Aussie dollar CAD. So everything basically has come down on the Aussie dollar on the rate announcement. ADRs across the board on the Aussie. We've got propulsion gaps in there on this news that the Australian dollar rate is 3.6, which is as expected. We would expect that to go up, ideally. But for some reason, it came down. So we're just waiting on that at the minute to pull back. But not sure if we're going to get a continuation push on this Aussie. So all of these, be a bit careful with them. They're all very, very nicely extended. Loads of wicks appearing on this one, on the Aussie Swiss. This one's really gone sideways completely. Aussie yen as well. Still down at the lows. Aussie New Zealand. So there's no strength in this Australian dollar at all. Aussie US. So we've got a strong US at the moment, so that's obviously coming down even faster. Look at the RSI on the hourly. We're now down below 20. On the 4-hour, we're extended to 25. So this thing's ready for a pop as well. But this is US dollar, and we've got Powell talking this afternoon. This is what worries me about this US dollar at the minute. I don't like it when we see a rally into a Powell speech. Quite often, this is an enticement. They're enticing us long because they know Powell's going to come out with something bearish. And he's going to dump the market, which is why I'm a little cautious on this US dollar Swiss. And I'm thinking, should I be taking this off here? Because if he's going to rally the market, we're exhausted already. We're up at ADR pretty much. So I'm not sure what to do on it. What I might do actually, how long have we got? We've got half an hour, haven't we? I'll tell you what I'm going to do. I'm going to trail it with 150 trailer. If he rallies and it pumps, I'll go with it. If he doesn't, I will just take some profit on it. Because what I'm worried about is him talking the market down, which will rally the indices, which is potentially our bull market coming back. So we'll see. Building a position on the Euro Aussie should play out nicely. Euro Aussie. Yeah, it's a nice short. They're all good shorts. All these Aussies are good shorts. They're all going to come back at some point. Euro odd is the ADR and weekly. Pound odd we looked at as well. Extended, that's 100 ADR on that one. And US dollar Swiss, which has hit ADR there. Obviously, it hasn't hit ADR on Fiddle Crest, different broker. Right. Let's watch the Dow. So the Dow, we've got 40 seconds-ish. Let's get the NASDAQ on. Let's turn the crickets on just for fun. Might need to turn the volume down a little bit because they are loud. So your pre-market 15 is there and there at the moment. We've got 2 propulsion gaps to the upside on the Dow. So it could have a nice quick rally up into propulsion. We'll see if we've got these sellers that have entered pre-market. Let's see if they're going to continue to come in. This move here is being caused by the US dollar strength at the minute. So this will move, obviously, in 3 o'clock. There we go. We're open. 3 o'clock, we've got Powell talking. So what I would be worried about today, as your pre-market break, is whipsawing here, basically, for half an hour ahead of Powell. They may not want to move the market ahead of that, so we will see. Seller heavy at the minute, massively seller heavy at the minute. Obviously, this is just the open, so we'll see what it does. There's lots of RSIs as well, which we'll have a look at in a sec. I'd like this to absolutely collapse. My ideal today is for this just to come down like a house of cards, because I'm long US dollar. So this thing coming down would be absolutely spot on. There's a lot of selling. We are making no progress whatsoever. Does the Germany 30 follow the NAS? Yeah, so basically, well, the DAX will tend to move the same as the US indices, but it moves different, as you can see. It does move differently because the DAX is a different market. It's a European market. But when we get a strong push in one direction on one index, we will get a strong push usually on the other, but not quite as much and not always in sync. You've got shared stock sectors between the markets. So there's aerospace in both of these. There's automotive in both of these. So if there's a sector purchasing happening on the automotive industry, both of these will go at the same time. Yeah, so that's why we get synchronization between the indices, because of the sectors, the stock market sectors. But you pay attention to the DAX in the morning, pay attention to the NASDAQ in the afternoon, and the Dow and the S&P, because this is where all the volume and the volatility is happening, not in the DAX. DAX moves faster in the mornings, or in the Frankfurt session. These move fast in the New York session. So whipsawing at the minute. This is what I was worried about today. A bit of whipsaw. We might get this for a bit. That was an hourly, half-hour close. What was that closing? What was that alerting there? Where's that alert come from? That's some profit coming in. Yes. Look at the sentiment, EA guys. Woohoo! Woohoo! Like it. I fixed the bug as well. I found out where the bug was. I didn't code it correctly. So I coded it basically to close once a day. And that once a day is triggered in the morning, not at the end of the day. So I've just changed the code so it now triggers at the end of your trading session. So that's all fixed. The load of bulls just entered there, as you heard. So we're pushing up now. This is the first 5-minute candle still. So here's your 5-minute opening range. Pre-market, obviously, you've been triggered long if you're taking the pre-market. If you're taking the pre-market on the NASDAQ, you've been triggered short and now you are long. So you've stopped out on that one. Now you're long. This is what I said this morning. This afternoon, really, 15-minute OR is probably your best option. The 5-minute, the 10-minute, I think, and the pre-market are going to be too whippy today, but we'll see. Got divergence at the moment. NASDAQ is trying to go bullish. The Dow is trying to go bearish. So push and pull, tug and pull, and just going nowhere. Of course. Slightly off topic, but with FTMO rules, what are your thoughts on averaging into long positions on indices with a 1% target? By the way, I was one of the people that first came on last Friday when there was a bunch of live people, and then over the weekend watched the Bootcamp. All right. Okay, there's your 5-minute opening range in. If you're brave enough to take a 5-minute opening range break today, short the Dow, long the NASDAQ. Good luck. Certainly dumping, isn't it? That US dollar will pump. Come on, US dollar. FTMO rules, thoughts on averaging into long positions. So the problem with position trading on any prop account is your daily drawdown limit and your max drawdown limit. So if you're averaging into positions on indices, for example, so if you were going to average into this, let's say we were building a long position. So if we got in one here. We got in one here. We got in one here. It will probably come up. We will get a profit take. So if it pushes down further, yeah, no problem. We'll probably be able to get a profit take on it. The problem being is you can't control how much drawdown you're going to go into. You are going to drawdown until that reverses, and you don't know when the reversal point is coming. Yes, it works, and you can do it, but it really depends on the day you do it as to what type of price action you get, as to whether or not you survive the 5% drawdown. So all I can say is try it. I have position traded the DAX and the Dow successfully on the 5-minute chart and hit target. But I have also done it in blown evaluations. And it depends on the day. So a day like today, I would be sitting there going, no way I'm going to try that, because I'm expecting it to whip. But on a day with no news, quite often you'll just get a lovely little trend form, and all you do is you just, I would get in, but I would add to my trades rather than position trading and waiting for that. You can do it either way. It really doesn't matter. As I say, it's down to the market. But if I was going to position trade, I probably wouldn't pick the indices. I would want to position trade on a couple of Forex pairs, pick 3 or 4 Forex pairs, maybe the majors, and position trade over a number of days and go for that 5%. Pick 5, scale in, and try it. That's all you can do. Yeah, it's difficult. I mean, there was like 80 people on the live stream last Friday, and I was the first. It was the first time I saw the channel. All right, okay, yeah, cool. Well, everybody, 47 people in here with 1 thumbs up. What's going on? Can we have some thumbs up, please? 1 like out of 47. That's it. I feel ashamed and embarrassed and hurt. Sorry, I'm still on lots of drugs. I've just taken a concoction of Panadol and codeine. So if I start talking rubbish, good luck with the live room this afternoon, everybody. Right, so we've still got lots of bulls coming in. I'm hearing lots of bullish price action on the NAS and the S&P. We are getting a nice move. So 5-minute opening range is kind of underway. The Dow, however, is totally log jammed down here. I would suggest that the Dow is probably going to pop up into that propulsion gap in the next 10 minutes. So if you want to jump on it as a quick scalp long now, I would say that's probably a pretty good trade. That's better. Got 17 thumbs up. That's much nicer. Still means over 20 if you don't like me. Morning, Tom. Oh, this is going to be fun. Yeah. Do you know what? These some sellers starting to come in. These drugs I'm on, this I can't remember what it's called, pregabalin I'm on. It's really good, and it keeps you in an overall state of slightly calm, but constant blurred vision and constant little bit tired. And then you mix it with anything else that gives you drowsiness, and all of a sudden the effects are like quadrupled. So I start going into a can't be even asked to lift my hands type scenario. Really helps with my shoulder, but it doesn't help with trading, which is why I'm not scalping at the minute. I'm literally just taking hourly chart trades because I'm too scared to scalp. I don't think my brain's in it at the minute. So if you're going to take that long up into there, basically it's just going to, we're assuming we're just going to follow the NASDAQ with the Dow. Lot more bulls coming in than bears at the minute. We just have had a flurry of sell orders come in, but the vast majority of this price action so far has been bullish. But I would say as well, obviously, I am fully expecting half-hour whipsaw ahead of 3 o'clock. So I'm just assuming we're going to whip up to there and back down again. we might not even do that. We will see. I'll leave that for a minute. We got 20 minutes until the news. So what we'll do is do a bit of analysis on the FX pairs. We'll pop in and out of this. Just get this on my other platform. Oops. Here comes some sellers again. Dow. Okay. So I'm just going to monitor that. Yeah, we'll have a look at the other FX pairs and the RSIs, and then obviously we can have a look at aggressive drawdown control and how to action aggressive drawdown control, which we will do. I've got the slides ready for that, which is from the live room, from the bootcamp. I haven't looked at the bootcamp, though, or these slides for roughly a year. So just to let you know, you're seeing this for the first time with me in the last year. So it might go totally wrong. So all these Aussies are completely extended at the moment. Oh, my gold trade. One sec, sorry. I just heard an alert go off and I was like, is that gold? Yeah, it is. Okay, cool. This is the Fivers account. I took a sneaky gold scalp, assuming that we were going to get a pump. And so far we are. Just seeing what I've locked in on that. 130, I'll take that. Okay, so I've got a target down in this propulsion gap here. In fact, what I'm going to do, just in case Powell really pumps it, I'm going to go for the lower propulsion. 225 ADR on gold. Don't think so. But you never know. This is Powell. He could pump it by another 100 ADR. That would be nice, wouldn't it? I'd probably bet you half my mortgage it's not going to happen, but stranger things have happened. There's a lot of bear market movement coming in as well, I can hear at the minute. So this is likely to pull back before Powell. But yeah, all right, I don't want the alerts every 5 minutes. One sec. Uh, 125 Aussie US. There's another one hit there. We are pushing down. Poof. Real nasty divergence here. You can never tell which one's going to go. So at the moment now, the Dow is pulling the Nasdaq down. That's where we started to move. So I reckon we're just going to flip flop. I would leave this alone until after 3. So 3 o'clock, when Powell is testifying in front of Congress, that's when we're going to get that move. So I just got a load of alerts. It's a busy afternoon. We've got alerts going off everywhere at the moment. Right. So all these ADRs and RSIs we've got today. So the ADRs, obviously, we've looked at all on the Aussie dollar. So obviously, as the ADRs have been extended on the Aussie dollar, the RSIs have also got extended too. So Aussie dollar CAD hourly and 4 hourly, big extension. We're down to 80. Yeah, so we don't often get down to the 80 levels. When we do get down to the 80 levels, we very rarely don't get a profit take move starting. So we didn't get one there. We just got a flag break down, and then the second one worked. And now we're down here. So the options are flag break, second leg, reversal, or reversal. Back up into support, which will become resistance, and into this propulsion gap. So that's the trade on the Aussie CAD. If that doesn't work, out to the 4 hour and looking for support, which will be down here at 200 ADR. Somewhere in that region, 175 to 200. So if this does just flag and then drop, that's where I'd expect to get the second pushback. So enter there, exit on that, or be brave and go all the way up to the top. So that looks really good. Aussie dollar Swiss, massively extended. We got this old propulsion gap here where we found, so we started buying, we bought. I don't expect limit orders there. Limit orders I would expect to be down here, but you never know. So this is an old area. They may hit some limits down here. and we might get some orders triggered. We'll see. But if not, down at the bottom. So we've got a nice area coming up down here that we're probably going to find. Jesus, what is going on? I've got so many platforms on. I don't know which ones are alerting me. Gold again. I know, you've told me about that. Aussie dollar Swiss. So yeah, this area here, 225 ADR. So this is ripe and ready to go for at least a pullback into there, if not some kind of nice big V-shaped recovery back up into here, or to test the previous support area, which will become resistance for a leg down. So this looks really, really good for a reversion as well. Massive extension on the 4 hour, massive extension on the hourly. We're really not getting any traction though down here, look. Literally, we've sold massively. We got one inside bar bull candle, and then we literally, bears tried again, failed. Bears tried again, bulls tried, failed. Bears and bulls both failed. Bears and bulls both failed, yeah? So these are just pause candles, absolutely no directional bias whatsoever. We've got half an hour, we've got 10 minutes left on this candle at the moment. If this candle breaks that 125, I reckon we're going to get another leg down. So if you have taken any reversal alerts on the 15, there hasn't been one on the 15. There hasn't been one on the 5. So there's been no reversal alerts on this anyway. So during the London session, so you haven't had an entry on it. So keep waiting basically. But when this goes, we'll be looking for a pushback, worst case scenario, best case scenario. So one of those two. So yeah, really, really good Aussie dollar Swiss. There we go. We just put him back up inside now. This is going to be a whippy open. We're stuck. Aussie dollar Swiss. So yeah, that looks really nice as a long. You took a gold on prop. You must be feeling squirrely. Yeah. I just really fancied it. Why are you still alerting me? Stop it. I turned you off. All alerts. Oh, individual. Huh? Individual trade. Profit alerts. So I didn't set that to 60, did I? Once a day. There we go. Now shut up. Thank you. Target on this is $1,500, this account. So the reason I took this gold, and it's totally counter to what I would normally do, obviously, because we're down at ADR. So you know what I am like. I'm a mean reversion trader. The reason I took this short is because of the speed this has come down ahead of Powell's speech. It means one of two things. Either the market has heard what Powell is going to say and they're in early. And if they are, this is happening today. Or they're enticing shorts in ahead of Powell's speech, in which case I would expect to find a strong bounce off of a support area. So I thought, screw it, let's go with the first theory that Powell is going to rally the market. And if he is, I would expect this just to go as soon as he starts testifying. So I thought, screw it, let's go for it. I think with this, he's going to be an ADR bounce back up into there, or we're going to get a real strong flush today. So I just saw gold and I took it. I was going to take another US dollar pair, but I thought as I'm on US dollar over here, on the US dollar Swiss, I won't take that one. But same theory with this. This is why I'm trailing this. If he's going to rally this, we're going to pump. So I'll go with it and get whatever he gives. You never know with Powell. He can do both. David, on this sentiment EA, if the overall sentiment changes, will the EA automatically close out? No. No, not at the moment. So at the moment, all the sentiment EA is doing is entering. It won't close out. Basically, you've got control over what happens totally yourself. Yeah. So I'm setting at the moment everything in profit. Just close it. If it's not in profit, get in again if there's more sentiment. If there isn't, we will deal with it another way. So I'm dealing with it manually at the moment. But we can add more positions. So you can add into the trade, you can add more positions on, so you can get it to add trades when we get a certain distance apart. You could use a trading stop. I don't know. Haven't really thought about the exit strategy in any detail apart from just get the hell out at end of day if it's in profit. If not, add another one. But if the sentiment's changed, it will still add positions. So, but again, these are things I might need to tweak and adjust. Also, the risk parameters on the EA is associated with ADR. Yeah, well, the risk parameters can be whatever you want. So you can either go with a fixed lot size, a percentage of balance based on your stop loss, or you can risk an amount of money, and your stop loss can either be placed at fixed pips, a multiplier of ATR, yeah, and that ATR you can set whatever you want. I have it defaulted to daily ATR on the 10-day, which is basically ADR. So I'm obviously doing ADR, but I know everyone's going to go, I want to do a trade on M5 and I want to use the average true range of the hourly or whatever. So I've made it flexible, but yeah, ATR 10. So yeah, stop loss is based on ATR, and I'm using one ATR, ADR, to calculate it based on $500. And then I've said, take the stop away and position trade it. But you'll do whatever you want. I can change that, obviously. Oh, there we go. Look, it did it. There we go. So we did the propulsion fill. I was early. I said to get in somewhere down here, didn't I? And we actually flushed out the lows. So if you took that, you got it. But it depends where your stop loss is, where you got it. Whether you got it or didn't get it. You know what I mean? But we hit it. We hit it. So Aussie dollar Swiss, we got 7 minutes to the news. Afternoon, Big Papa. So there's your Aussie dollar Swiss. Aussie dollar yen, again, extended down to 20 on the 4 hour. Hourly is extended beyond 20. Same thing, massive extension. We don't get down here often. When we do get down here, we get a profit take. That was a dodgy one. So that one got another leg. So you see what I mean? You always get the profit take. You have to, because the amount of money sitting short here has to go long. Otherwise, they don't make any money. So it's just a case of, are we going to get a second leg? If not, brilliant. If we are, add a second. So getting in, second leg maybe down here somewhere, and then we'll get the profit take move. So it's a two position scaling. It shouldn't be more than that, and be back up into that propulsion gap there. Same with the H4. Yeah, we're extended on the H4. Yeah, it's just a case of waiting for the market to decide which one and when. Yeah, so we're going to get the profit take move. So just get in on a reversal alert. Wait for a sign of strength, either the 15-minute or the 5-minute. And just that one, you will have had a 5 on this already. So there will have been reversal alerts in there. We've just invalidated them by putting a new low in. So there's your new reversal alert. So if you're not in it, there's your entry. TP, tricky. So if you're getting in somewhere like this, that would be your ultimate TP. It could be a really tight one. So, don't get too greedy on these. This Aussie dollar is not happy today, as you can see. Aussie dollar, New Zealand, we've got a strong New Zealand dollar. This thing is not stopping. We're going to get 200 on it. We got 175 already. So Aussie New Zealand coming down to 200 ADR. You can tell it's at 200 ADR because the lines are mixed. Yeah. The high ADR crosses the low ADR at 200 because we've moved 200 ADR. 100 ADR becomes the entry. So the opposite side of the other ADR, obviously. So big moves down on this. Again, huge. There you go. There's your 200 ADR. Huge extension on the 4 hour. We're not quite under there yet. But you can see, okay, so this is a prime example of what I'm talking about for a position trade entry. Big extension. Yeah, if the first one doesn't work, the second one usually will. So this will be your first one, and look how extended that is. If you get a second one, it's going to be under the 80 level, and by then they'll be so exhausted they will have to take profit. So looks good. Aussie New Zealand. This New Zealand dollar, though, is really ramping up at the moment. So we've got nice support coming as well, which we're probably going to find some limit orders firing off of. Actually, we're in it. So it's this level here, that high really, but that high and that low. Those two lows there. Yeah, so we're in it, ready to bounce. So this looks good, Aussie New Zealand. I'm already in this. Oh, look at that pullback. I'm already in Aussie New Zealand on this account, on the Fiddle Crest account. Too early by the looks of things. But my stop is here, so I've still got a fair distance, and then I'm going to add a second to push up. So it's just one risk, 1.5% risk at the minute. Gold is starting to pull back. We have 3 minutes until Powell. So yeah, Aussie New Zealand and the Aussie US, massive extensions. Again, Aussie US, again, don't get into this. Well, if you're going to get into this now, you want Powell to dump the market, because if he dumps the market, this is going to pop. If Powell's going to rally it, this is coming down to 200 ADR. So don't get into this 3 minutes ahead of the news. That would be silly. But yeah, so we'll see what happens when he talks in a minute. What I might do is I'll just whack financial juice on, and then we'll be able to hear anything important.
We have got the live video for Fed Powell's speech on the feed for those interested, again, due to start at the top of the hour.
So those are your Aussie dollars. So they are all massively extended on the ADR, all massively extended, well, all extended.
From Fitch Ratings, who say US state tax revenues continue to rise, but show signs of a slowdown.
What I might do is turn that off, because that's going. He's going to basically say everything that Powell says, emphasizing whatever comes in red. So he'll just waffle on for ages. But yeah, hourlies are very extended on a couple of them. 4 hourlies, obviously Aussie dollar Swiss is massively extended at the moment. Aussie dollar New Zealand dollar is just about to be as well. So Aussie dollar Swiss, really, at the moment, that is the most extended pair of the lot. So best pullback potential. We are 137. We're pretty much 3 ADR away from the 24 moving average, which is a long way. Yeah, that's what we tend to get. If we get this extended, we're like, nope, we're going to need to come back. So, but I get the feeling we might actually get stuck there, because I think this might be a bearish moving forward. So we will see. Okay, 1 minute till Powell. So I'll cover the other RSIs in a sec. Not sure if we should really listen to him or not. Let's just put him back on, just see if he just goes for everything. But sometimes he just calls out the red. If he just calls out the red, it's all right, because I want to know about the red.
Less than 10 seconds. So comments from Fed's Powell coming through now. If the totality of incoming data indicates faster tightening is warranted, we are prepared to increase the pace of rate hikes Says we will continue to make our decision meeting by meeting based on the totality of incoming data and implications for outlook for growth and inflation. The ultimate level of interest rates likely to be higher than previously anticipated. To get inflation back down to 2%, we need lower inflation in core services, ex-housing, and very likely some softening in the labour market. Little sign of disinflation so far in core services, excluding housing, says some of the strength in the overall January data likely reflects unseasonably warm weather.
This is all strong US dollar.
Stronger than expected, particularly in inflation pressures. Says restoring price stability likely requires that we maintain a restrictive policy stance for some time. Says it's a long way to go to get inflation back down. The road likely to be bumpy. Labour market remains tight, and says that ongoing increases in policy rates are likely appropriate in order for the stance to be sufficiently restrictive in order to get inflation back to 2% over time. Says history cautions against loosening policy prematurely. So again, just some of the key comments from Fed's Powell there. Says the totality of incoming data indicates that faster tightening is required and they're prepared to accelerate rate hikes, and says the ultimate level of interest rates are likely to be higher than previously predicted. So seeing some downside movement in US stocks here, upside movement in the dollar as well following these remarks from Fed's Powell.
Okay, so the 5.25 rate, which they expected to be terminal, likelihood now being that that will not be terminal rate. So where we're forecasting another 2 rate hikes for the Fed up to 5.25, there is a chance now that we will be looking at somewhere in the region of 5.5. I'd be pushed to go over that, but what it means is the likelihood of having a 0.25% increase is possibly going up to a 0.5 now, because this isn't going down fast enough. And as that did not go down as they were expected in the way that it was expected, I suspect they know what's happening with the unemployment figures are coming out on Friday. They're happy to increase this, which obviously makes the US dollar more attractive. So we should see further strength coming through on the US now. Obviously, gold now being pushed down. US dollar Swiss will be pumping. God, could we hit target on day one, do you reckon? That would be nice, wouldn't it? So yeah, bullish US, basically. Bullish US, bullish CAD. I would imagine. Indices, just forget it this afternoon. If you're not on that short, is anybody on that short? If you're not on that short, don't try and get on. It's impossible. Oh, you can hit the button now, but where the hell do you put a stop? You know, just if you're not on it short, it's over for the afternoon. We'll do something else. Oh, Christ, I've got alerts going off all over the gaff. Oh, a lot of banks and profit. That's good. So I've got 1% profit target, which means I've just banked some. The sentiment EA is just banked. It has banked an Aussie dollar Swiss. All my terminals are freezing on the VPS. There is so much data coming through, they can't handle it. I can't get to any of my accounts. We'll leave that for a bit. New Zealand, US, just give this time to settle. This is big bullish expectation. Who would have thought to wait for the Fed chair to speak would be so exciting? I know. It is exciting. ES short, Brian. Nice. Stay short. Hold it if you can. This could well carry on for hours. Life is hard with high interest rate. Yes, but it's not as hard as going through a multi-year recession. This is the whole thing with what we're seeing here with these interest rate hikes. This is to get us out of COVID, out of recession. So we were expecting a recession. If you look at the GDPs, we were expecting negative numbers across the board here. We're not getting them. Apart from the pound, we're going to go negative. but we're not getting this. And it's because most of the countries have managed to get the interest rates up fast enough. But obviously it's a balancing act. So this needs to still come down. And we are at that point now where we're expecting that to happen with inflation. And as long as that does happen with inflation and unemployment just does that ever so slightly, and it doesn't do that, that means you can give this more welly, which drives that down much faster. And as soon as that gets down to 2%, you drop this like a rock and hope that everything stabilizes without the house prices crashing. That's the main key thing, because this causes people to have to sell their houses because you cannot afford your mortgage anymore, which means you get poorer. As you get poorer, you spend less money. As you spend less money, your GDP drops. People become unemployed. Companies make less money. They make redundancies. That drives inflation up. It's all a very, very fine balancing act, and it's all driven by this. So when the Fed come out and say we're going to go higher, the market is interested in investing in the dollar because you're going to get a higher return, but it needs to balance all of this out. So it's bullish, and it should remain bullish for the US. But when you've got moves like this going, it's very, very, very difficult to get in. What we quite often see is that very quickly. And if that happens, that is a good sell. But what also we find is that this thing just doesn't ever stop, which is what I'm hoping for, because that means that gold will just continue to drop. I'll get out with whatever it gives me, basically. Oh, I've just banked something. What have I banked? Oh, I hit target on the pound yen sell. That's that bloke that spammed the Telegram group. If you're in the Telegram group, we had a spammer come in earlier, and he basically put a signal in the Telegram group, short gold. So I did. It hit target. Oh, I'm going to message him back and say thank you. Thanks for that, buddy. Made a loss on my pound odd, though. Love it. ADRs across the board. Don't get on any of these, for God's sake. You're likely to get run over. Good boy, Powell. Banked something. That was the CAD Swiss trade from this morning. It's hit TP. There you go. Propulsion. Straight back into propulsion. Potential target at some point, but not now. Where's this going? So there is potential for some movement there. Resistance. So if we get that support bounce, we're going to have a massive propulsion gap obviously put in here. But we've still got that to test. This could be a big move down today. So you can try and get on it if you want to. It's just very, very difficult to try and get on something like this. Oh, we should have listened to Tick Strike, shouldn't we? Should listen to the sellers. Aussie Swiss, I think, was that a monthly? Weekly? No, Aussie Swiss, weekly. Everything's just going mental. So I don't think there's much point in me doing the analysis. Euro odd is massively extended. Everything that's massively extended that is not US dollar based is a legitimate target. So euro odd short, definitely. It is counter trend though. Look at this. What an opportunity that is. As long as I can survive it. What am I? 175. I'm stopping out at 175. That's a lovely short. That is a beautiful short. Really, really easy to reach as well. So I really like that euro odd short. We're out at the top now. I'd expect somewhere in the region of half an ADR stop hunt on a 4-hour chart, which is 60 pips. We are sitting at 60 pips. So there's potential that this could start to run out of steam any second. Quite often a 4-hour, if they're doing a liquidity run on a 4-hour chart, trying to take out larger players. Larger players are not retail. They do not put their stops at there. They put their stops distance, give things room to breathe, like half an ADR. So we quite often get a half an ADR move above, and then we obviously then start to get that pullback, and we either get the bounce or we come back and test another support before we go. So that's worth watching. That may well come down from here. I might carry on, might not. We'll see. But that's massively extended across the board, 4-hour hourly, above the 80. It's coming down at some point, but watch that for you're not going to get a reverse alert on it until we're back down below almost at 125 ADR. But even so, there's still plenty of room. Well, if you want to wait for that, that's a confirmation that we've got sellers on board. We might then push back up and put in an M pattern. But that's your target. Euro CAD is extended. That will be moving on the Canadian dollar will move with the US, so that's dumping. Pound odd. So this is still good for a short. Extended on the hourly very nicely. Double top. Look at those tweezer tops there. Look, beautiful. Where is he? There he is. Mr. Week. Somewhere in there. So I'm on pound odd already on the Fivers account. Short. The other one is US dollar CAD. So yeah. Meme revert that at your peril. Yeah, I'd be worried about shorting that. It's these moves are very, 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 very difficult to play because we often see off of a news event like this, we often see an A-shaped recovery. We often see an immediate retracement within the hour, and often we see a move like that over a 2-day period, or over today and tomorrow. Sometimes we get, as we did with the previous news, sometimes we get a multi-day propulsion move. So this was the unemployment figures. Yeah, so sometimes we will literally just dump for days after a move like this. We will come back 90% of the time, but that is what we could see. And then we'll be back here, maybe unemployment on Friday, maybe next week. But they will mean revert. It's just you have got a 50-50 shot. You are trying to stand in front of a steam train at the minute, and it's got no brakes. So don't try and jump on these. This is what the reversal alerts indicator is for. You need to see signs of, it stops you getting into these stupid trades. But if we do start to do that, that's when you start to get in. If, big if at the minute. Let's go gold. Never thought I'd be saying that. Live on stream. Under my breath. Hey, can you show one more time the ADR on gold? I got my long reversal at 1817.6. I don't know what you mean. God, this is why I hate MT5. This is why I hate MT5. Watch this. People say to me, why don't you use MT5? MT5 is much better. MT5 is not better. MT4 does not do this. Crap. Look at it. Still updating. Indicator. You can't flick charts. Doesn't like it. It's just not, it's just, look how long it took to draw the ADR in there. It's awful. MT5 is just terrible. MT4 rocks. Don't use it. You've got an entry 1817.6 to go long. So you're going long off of that, aren't you? 200 ADR. If it gets there, yeah. I mean, I wouldn't have a problem longing that. This is what these figures are here for, yeah? These numbers, this 2%, this 3%, this is why these get hit. These get hit only on fundamental news events. You won't find these getting hit on a daily basis. If these get hit and there's no news events, you know there's a news event coming, or it's just a beautiful mean reversion. It will usually happen the same day or next day. But this is a news event. So you can get on a news event a 300 ADR move, especially on something like this. However, it could mean revert at any minute. Yeah, you don't know when this is going to stop. The institutions at the moment are driving this hard. They're buying the crap out of the dollar. At some point, they're going to stop buying the crap out of the dollar because they're just going to run out of liquidity to do that with. This is what ADR is all about. They have a limited amount of money they can pump into an instrument before it becomes unprofitable to do so. And they need to exit those positions to refill the coffers, take a profit. You never know when that's going to happen. It could happen at any second, but I've seen this go 300, 350 ADR on a move like this. So thank you, Mr. Powell. My GU short gain 1%. Awesome. Up 7% on a 50k prop simulation. What, is it an evaluation? Or is it a demo of a prop with FTMO? If it's an evaluation, good job. You're 1% away from hitting target, aren't you? This will still be dropping. We are starting to get a little wiki. I have turned the crickets on, but they don't seem to be cricketing. I don't know whether I need to refresh this. We will actually run through the Powell news as well. Let's put them on. So what he said was restoring price stability will almost certainly necessitate US maintaining a restrictive policy stance for some time. What that means is high interest rates, maintaining those, not dropping them. So the 2.75 at worst case scenario is staying put for a year probably. Rate futures Policy rate futures pricing greater likelihood of half-point rate hike in March. So that's what I said. Remember, I was saying this 0.25 that we are seeing now, what Powell is saying is there is a bigger chance of that now becoming a 0.5, which is massively bullish US, because it means there's another 0.25 off the back. That takes us over terminal rate, which makes the US dollar bullish. Rates may need to go higher and faster. So again, that we could be looking at a 0.5 followed by a 0.5. That would be phenomenal. That, if that happened, so going back to the follow. Thanks for the follow, whoever that was, Pandu. If we are going that fast and that hard, what we're going to find is the US dollar yen creeping back up towards that 150 level, which is where the Bank of Japan will be knocking on the door saying, no, you don't. So if we get some more movement up to, I would say, the 140s plus, we will start to see the yen start to power up a little bit. So the yen will try to combat the US. The ultimate level of interest rates is likely to be higher than previously predicted, which again, above a 5.25. Here come the bulls. So this might be a start of a mean reversion play. Oh, wrong terminal, sorry. So take your pick. If the sellers are going to add into their positions, take your pick. Somewhere in there you want to get short. Good luck. I'm going to be out of my gold shortly. I'll take that. A little speculative short, $437. Thank you very much. So yeah, 5.25 plus. Continuous policy rate increases more likely. Inflation back to 2%. Half a point rate for March. 5.61. Blimey. Right. Okay. Let's turn it off. We know the bulls are coming in. Obviously, we can see it on the chart. But so 5.61. So our previous terminal rate was expected to be 5.25 off of a 4.75 expectation. Now they are saying 5.65, which means that a terminal rate will be somewhere between 5.5 and 5.75. Yeah, so it's half a point increase more. Which is basically two of those, and maybe one more of those. So this is really, really bullish US. This is one of the highest interest rates targets or forecasts they've had for a very long time. So as we're pulling back now, we've potentially got a second leg starting. So it's very difficult to get in with a stop loss that big, but that's really what you need to do. So as this is pushing up into here, if we're anticipating a second leg drop, you need to be paying attention to where that is going to occur. That gold I should be out of now. Oh, not quite. So I'll be stopping out of that. So again, gold, there's your propulsion move off the news. That's where the retest potentially could get to. And of course, you know, like I said, this could be just a V-shaped recovery on the cards. Holy crap, I'm making some money. P&L on my funded account is sitting at 1,300 at the minute. I love Powell. He's nice. Sometimes I hate him, but at the moment I love him. 196. There you go. So target is 5% on this account. Bank 196. 1.97% today. 3 trades open. That sell on the euro odd is starting to come out. So that's starting to play out that euro odd sell. This one. So nice rejection. Mr. Weak. And his dog. And his disabled dog, unfortunately, that looks like a goat, have entered the building. So that's starting to play out nicely. Nice drop on that. We've got a big drop on that on the cards. Potentially an ADR, 120-point drop. Big move on the cards there, maybe. We'll see. Okay. So this is where tick strike, becomes really, really useful if you're trading futures. Yeah. So when you're trading a pullback in the futures market, you're listening for that. Yeah. You're listening for signs that we've got sellers on board. And ideally, you want to start hearing nothing but the sellers coming in, or you want to hear nothing but buyers coming in and the buyers getting nowhere. So if you hear nothing but positive ticks, which this is all negative ticks, if you hear positive ticks and we cannot get higher than there and it goes positive for 5-10 minutes, it means that the sellers are just absorbing every single buy order that's coming into them. And eventually those buyers will just give up and go, right, screw it, we'll sell the lot. And as soon as they sell it, the sellers will get on board and you get a dump. So at the moment we're hearing sellers coming into the market, which is a good sign, but it's not consistent. But that's where tick strike is really, really, really useful. Sorry, just catching up on the chat. As you advise only 2 trades per individual currency per strategy at one time, how do you initially identify which pairs to trade, and how do you identify new future trades? So if you're getting in and you're limiting your exposure, let's do this one. So you get in, right? So I got into Euro CAD and Euro odd. I am now fully exposed on the odd and fully exposed on the euro. No more of those. Can't take any more. I'm exposed. Yeah, because these are the first opportunities that I saw that I fancied. So now, if a Euro New Zealand trade comes up, right, on my dash, so if I get an alert to go on Euro New Zealand, on RSI dash, or on ADR, or whatever strategy you're trading, right, you go, okay, that's brilliant. Can I take that? No, because I'm fully exposed on the euro. And that's it. Simple as that. So you get into trades. So you see something come up that you like, you get into it, and then the next alert that comes up, you go, I can't take it because I'm in it. Yeah. So, for example, here, I can't really, those all actually fit into those pairs. So, but, whoa, there's a lot of sellers. That was a big flurry of orders came in there. Euro pound is ADR. Right, so there's a good example. Perfect example, perfect timing. Yeah, Euro pound has just come up. So I have a look at Euro pound and I go, oh, that's a big spike at ADR. I like the look of that. Let's have a look on the higher time frame. We're getting extended on the higher time frame. Let's have a look up. Are we at a resistance? Oh, lovely. We're getting up to a resistance. I like the look of this short. I'm going to take this and I go over here and I go, I'm fully exposed on the euro. I can't get in. That is it. Simple as that. You get into trades until this says 2 in the same direction. When it says 2 in the same direction, if you get an alert, you don't take it. Makes sense? That's exposure. That's why we have exposure on the dash. Got to keep track of that. If I go like that and like that, and the Aussie dollar collapses tomorrow morning, I am 4 times more exposed than I should be. If I had 0 exposure on, I would not give a monkeys about that. If I had 4 exposures on long and this thing comes down 2 ADR, I've got 4 positions going into 2 ADR drawdown at the same time. That's going to hurt badly. This is why you monitor this, so that you don't get yourself overexposed. Because if it goes the wrong way, your drawdown just goes through the roof. Or losses, drawdown and or losses, whatever, whichever way you're trading. Brian, 1.25% from ES, taken half off, stop loss move to 0.75%. Very nice. Good job. on demo FTMO, I got 9.5% on these moves. Nice. Now you're wishing you'd done an evaluation, aren't you? Always the way. Always the way. You can make so much money trading on demo. Then you go into evaluation. That's why I don't do FTMO. When you fail an evaluation, in my opinion, it's really tempting with companies like FTMO that offer demos to go, all right, okay, I'll go back in and I'll practice. And you will pass that evaluation demo, and then you'll be like, brilliant, I've got it. And then you'll go back into your evaluation and you'll hit it at a bad spot. And you'll fail the evaluation. You think, why didn't it work last time? And all you're doing is you're extending the amount of time from passing by doing demos. Just get in with the evaluations and treat them like a real account. They cost money, but they're important because it's trading real, like trading real. Right, okay, so this is what I'm talking about with absorption. So we're listening now to buyers. There's lots and lots of buyers. Yeah. So what we want is these buyers to keep buying and buying and buying and buying and buying. We're not hearing it at the moment. We want to see them keep buying, and then the whales, or the icebergs, as they're called in futures, stop them. It means that there's someone sitting here, yeah, with 200,000 contracts ready to go short. And you can chuck 50,000 at me, 20,000, you can chuck 10,000, you can chuck 100, you can chuck another 20,000. I don't care. I'm just going to keep spending this money and dumping it into you until you give up, and then I'm going down. Yeah, so that's what absorption is. So when you hear a lot of buying, or you see a lot of buying like this, you can see this ticking up, ticking up, ticking up, ticking up, ticking up, down, up, down, up, down, up, down, up, down. The orders are being absorbed by someone in the market. I say someone, an institution, a large player. But they may well have order blocks sitting here, here, and here. So they will absorb this lot, and then they will fall back. Think of it like trench warfare. They will fall back to the next trench, and then they will execute the next batch of 200,000. And then they will pull back to the next trench and execute the next lot of 200,000. By the time they've executed 600,000 contracts short, the people that are trying to buy this will be absolutely knackered, will have no buying power left whatsoever, and they will just all get run over. And as soon as those buyers who have bought all these contracts go down, they will be in a loss. So what do you do when you get into a loss? You take the profit off. You take the loss. By becoming a loss, you become a seller. So you join that movement to the downside, and it goes flush. That's why you get that movement. And that's why you get a pullback that climbs up the stairs and falls down the elevator shaft. Yeah. So here comes more buyers. Yeah. So what you're hearing is a large batch of contracts all being executed. And of course, there is the opposite, where, you know, these whales or iceberg orders, they do get run over. Yeah. Because you think about this, these are institutions, these are banks, right? And if this is Barclays selling, and this is HSBC buying, we don't know who's got the biggest amount of contracts. One of these has got more than the other. That's why price goes up and down. That candle was caused because Barclays had more orders to execute on that 5-minute block. On these 5-minute blocks, HSBC had more orders to execute, but not as many as Barclays, so Barclays sold some more. This is why price candles move up and down. But when you get a move like this, you know that some institution is short right now. Or most of the institutions are short right now. But is this a profit take move? Yeah. They've sold all of this. Someone has been buying the crap out of it on the way down. So, you know, it could just revert, and that's why we get the V-shaped recovery. You can never tell. But tick strike really helps you to hear what is going on in the market. Yeah, it's quiet at the moment. The buyers have just had a rally. They've just shot loads of ammunition across the trenches. It's all gone quiet. They haven't made any progress. They've made a little bit, but didn't manage to get any further, did they? And eventually, you'll find that it will just go like that. And you know that that's the point when we're going to fall out of bed. Euro pound is getting stuck. So out of gold. Nice little trade. Today, a new ad popping up. The R3 method. Didn't watch the ad, but kept showing up today. R3 method. I've not heard of that one. That's a new one. Brian out of ES. Good job. Afternoon, Stevie. Is my financial reduced the paid one? No, it used to be. I've got Tick Strike. Basically, I buy Tick Strike when I trade futures. I dip in and out of futures. I'm really crap with futures, so I dip in and out of it. A lot less now than I used to, but I just buy Tick Strike when I trade futures because I need all of them. They only give you S&P on the free version. I need the NASDAQ as well. And this is ever so slightly delayed, you know, with actually, no, Tick Strike, I'm not sure. I think it's delayed by a few seconds, which really doesn't matter. But you really want live when you're trading futures. You need to be on it. Every tick's worth $12.50, so it's important to be on the point, if you like. Stevie, happened to me on the Swiss rate announcement, was in 5 Swiss pairs, and that thing just tanked. Yes, exactly. That's why we do exposure. I passed 4 demo in a row, and the first evaluation blew it. Yes, stop doing demos. Demos, prop firm demos are exactly the same as evaluations. But the mentality in demo is different to evaluation. So do evaluation, because that's what you're going to have to do, and that's how you're going to have to trade when you pass. So stop playing around and do it properly. There is a massive difference between trading a live account and trading a demo or an evaluation account, psychologically. And you need to get your brain trained for what's coming. So just get straight in. I don't believe in demo on prop. Every prop account is a demo account anyway. So, Brian, icebergs, haven't heard that in a day. No, iceberg orders. Iceberg right ahead. Titanic, iceberg, think. So here come the sellers. Nice tweezer tops there. Good short opportunity. I'm not being funny, MT5, but what is all this flicking around crap? Yeah. It'll draw ADR in a minute. I'll give it half hour. I'm going to miss this trade in a minute. Yeah, just trying to short 0.25%. Might be early on this. It could revert completely. That's where, if it does get there, that's an obvious sell. But basically, we're running into where the buyers executed their initial orders. So what I'm worried about is that for the rest of the session. We're 3:40 now, so we've been open for over an hour. US 500 is correlated to the US 30. Less so. So the sorry, one sec. I'm just being fed a cookie. How good's that? Can you smell that chocolate cookie? So yeah, it's not as much. So if you look at the US 30, it now is different because they are a little bit more correlated. But the Nasdaq and the S&P 500 are usually virtually the same. The Dow is usually different. So we saw at the open the Dow coming down and the Nasdaq going up. Yeah. Where's the Nasdaq gone? There. So we saw divergence on the two. So that was going down and that was going up. Yeah. Because there are less stocks in this than in the Nasdaq and the S&P 500. So I just want to say, I'm just going to add one more. What's that button not working? Oh, there we go. I'm just adding another smaller position to it. I'm just looking for basically a drop down to ADR. Actually, yeah, whoa, that's way too tight. So yeah, the correlation between the two is different because you've got less stocks in this, so it's easier to move that. One individual stock in the Dow will have a, in theory, a 30-to-1 ratio of moving it. In the Nasdaq, with 100 stocks, one stock has got a 1-to-100 ratio of moving it. So if you get two stocks moving in the same direction in the same sector down on the Dow, this thing will come down hard, whereas this thing will not really move because there's another 98 stocks balancing it out long, for example. So these are different. They will be very, very, very similar, though, in their movement, in the fact that if we get sector purchases, which is how most stock buying and selling is done by institutions and hedge funds and pension funds, they will move at the same time. When you get things like this, obviously, this is the US dollar pumping, so that devalues the stock market. So all the stocks come down at the same time. Ed MT5, yeah, MT5, pile of crap. Chocolate cookie, that's just the munchies kicking in. No, I tell you what, these the drugs that I'm on, the prescription drugs, they make you eat. God, one of the side effects. There's two main side effects to the pregabalin that I'm on. One of them is blurred vision, which I've got, and I can hardly read the charts. The prices I can't read. I can actually read them better on MT5 than MT4, funnily enough. For some reason, they're clearer on MT5. I don't know why. And hunger. Absolute starving hunger. I'm like literally, I'm going downstairs for a cookie every half an hour. It's bad. I've put on, because I've stopped exercising. Yeah, I spin 8 times a week. I haven't been to the gym for 5 weeks now because of my shoulder. And I've put on over half a stone because I can't exercise. It's a nightmare. But anywho. Say, Livy. But the NAS and the US 50 are the same. They're very, very similar, yeah. So the NASDAQ and the S&P 500 are very, very same. Very, very similar, yeah. There's much more correlation between these two. If you scale out and look at an hourly chart, yeah, of the S&P 500, yeah. Very, very, very similar. But then you look at the Dow. Yeah, you see how we got that little bit in there. We got a big, stronger push down there. We had 3 candle wicks at the top. Yeah, so the movement direction is usually the same. It's much more powerful on this than those. Yeah, so you'll have divergence across these two. Yeah, the push up was a lot stronger there than it was there. Yeah, we didn't manage to make a higher right shoulder on the head and shoulders. We did there. Yeah, so ever so slightly different in that respect. I am conscious that we're meant to be doing a lesson this afternoon, so I will get on with that in a second. All the analysis is done. It's just been a massively busy, obviously, session, isn't it? So I've covered everything I need to cover in there. We know there's lots of opportunities all over the place at the minute, but you need to wait for the market to calm down really a little bit. Damn, that's pushing back up again. Euro odd is pushing back up again. This is the euro by the looks of things. Yeah, strong euro. Obviously not against the US dollar. Okay, so it's all gone a bit quiet. So I'm just going to... Do I want to break even that? I'm quite tempted just to shut that out, to be honest. I'm going to close the most profitable trade, that top one, and then I'm just going to break even the second. I'll probably get stopped out on that second trade, but I might as well bank it. This account, I've got to do 1.5 grand on it. Target. So I've done a third of the target to date. So I don't want to let that drop really. And this one looks like I may need to give half of that back, but we'll see. Buyers are starting to come in. I'll just turn tick strike off. Right. Algo Cats. I mean, if NAS is going down, US 500 is going down the same. Yeah. Your broker doesn't have the NASDAQ. IC Markets. And I have to trade the US 500. It will have the IC Markets have got the NASDAQ. Definitely. It would just be called something else. Including those. They will have it. There you go. There you go, US Tech. US Tech 100. That's the NASDAQ. On IC Markets, it's called US Tech. That's the NASDAQ. Putting back. What subject topic on the lesson? Drawdown control. How much fun is that? So I might as well cover it now, basically. I'm just seeing if I've got anything in drawdown massively that I can use. Oh, no, my terminals are all freezing up. So, nope. Why is my VPS frozen? That's annoying. Sorry, I'm thinking. I'll just do it in theory. I think I've got a theory in the slides anyway. So, so if you're happy, I will cover the drawdown control now. I'm just going to stick the slide up, and then I'm going to start a recording because I want to record it, and then we can have it posted, can't we? So, but I've covered this before, really, in the thingy. So, anyway, right. So, aggressive drawdown control, basically. So the reason you do aggressive drawdown control is when basically you're hitting in any position you've got on a level that you are uncomfortable. Okay, so your level of comfort will be different to everybody else's. So everybody's got a different comfort level, which is all covered in the course basically. But some people will have a comfort level of 3% in drawdown. Some people will be comfortable in 5% drawdown on one instrument. And your drawdown basically is dependent on your total or an individual. Yeah, so it will be one or the other. I personally, what I tend to do is I use 0.5% as my drawdown, right? So, sorry, 0.5%, 15%. That is my, oh my God, this isn't going very well, I need to get aggressive. Or if I've got an individual instrument that is getting in the region of 3%, that's when I'm getting uncomfortable. Because if I got into 3% drawdown and I'm using 0.5% risk per position on half an ADR, or 0.25% risk rather on half an ADR, I will be in somewhere in the region of 5 to 6 positions open, 5 to 6 trades open. And it will have pushed really, really hard against me. So that's when I would start to think, right, I need to do something about this. Yeah. So it's basically a way of accelerating your exits from bad positions, but we use a stop loss. So the whole course, the whole position trading bootcamp is about scrapping the stop loss. This is where we introduce it. And the reason we introduce it is because we are getting in with a large lot size. Okay. So I won't run through this entire slide, but you can read obviously the slide. It's basically what I've just said. It's when you feel uncomfortable in a trade, and it's a way to just dig yourself out of it. Yeah. So we're going to get this happening. So there's lots of different ways of doing aggressive drawdown control, but the most common way is just to get in with a large normal order that you would have used in the past when you were a stop loss trader. So we're just going back to our roots where we go, right, okay, let's start using a stop again, but we're using it to get ourselves out of our position. So I've got an example here. As an example, let's say you have an initial trade that we took when RSI was extended. So RSI had gone up, yeah, or gone below 30 in this case. Look, so we've gone down. We're using a 0.05 lot size, and it pushed against us further, and we got into 4 more positions. Yeah, so we now have 5 positions in total, 0.25 on the position, right? So we're taking a 0.05. It goes down. We take another one. Down, another one, yeah, and this goes down until we've got 5 positions on. So this RSI, basically, we started at 30. Imagine where it is now. We're probably extended down to something like 15, right? We've had a big, strong push against us. So the RSI is now sitting at, as I said, 15 there, massively overextended, and it's going to pop, right? So these guys have been selling, and they're still selling. Where elastic band is massively stretched. At this point, we're expecting the snapback to be much bigger because we're more extended. So examples we've got at the moment, lots of them. Here we go, look. US dollar's pushing again, just by the way. These RSIs, ADRs and RSIs, yeah. So we've got things which are massively extended here. Good example, Aussie, New Zealand, spot on, perfect. Yeah, huge extension. So we started getting into this trade here. We were like, in, yeah, brilliant. Oh, let's get in again. Let's get in again. Let's get in again. Let's get in again. Holy crap. We're massively extended. We've got all these big propulsion gap targets up here to aim for. And our average is going to be somewhere in here. So what we do is we just take a larger position using a stop loss here when we see ourselves in a massively extended condition, 200% ADR, RSI down below 15. That's when we get in with our big lot sizing. So we took a 0.25 over 5 positions coming down. What I would then do is go, right, I'm going to get in with a 0.13 here, roughly half of my open lot size. And what that does is it drags my average from there all the way down to here by getting in with a 3 times as big lot size. Yeah. So 0.25, I'm getting in with half of that. That really drags this average down for you. And look how far you've got to get out then. You only need like a quarter of an ADR or a half an ADR push, and you can get out the whole thing with a break even. Or you can get out with this position in profit and do drawdown control on these. So take half off of all of these. And that again brings your average down further. So that's what we're doing. That's the whole point of aggressive drawdown control. Yeah. So as I've said here, basically, when you're uncomfortable in any one of your trades, we're going to take roughly a third to a half of our total size. Yeah. But this is a calculated risk. We're not doing martingale crap or anything like that. Yeah. We've got 2.5 on. We've been very orderly, and basically the market's just said, nah, not letting you have it. So we go, right, fine. This is so extended. We're going to get in, and we get in big, right? So it's only because of this reason. Yeah. And this is why we get in when we position trade on extended conditions. So we are entering when we are expecting the market to pop. And we've got a reason for it to pop into a propulsion gap, for example. If it doesn't do that, it can only do one thing, get more extended. And we know that the conditions when we get above 80, below 20 on the RSI are way more prevalent for that sort of move to happen. And right now, it's much more likely that we're going to get a pop, propulsion gap target. We're going to pull back. So this is where we get in. Yeah. So as long as you're getting in extended conditions and it gets more extended, the only thing that can happen is a bigger pop. Yeah. That was 2 positions. Yeah. So that's an example of 2 positions. Obviously, what we're talking about here is getting into 4, 5, 6 positions. So, that's when you get into your aggressive ones. The whole purpose of this is to bring our average price down. Yeah, so that's all we are interested in, is bringing our average closer to our entry. I really want to switch, brilliant, over to a trade I've got on ADR, which would be Euro odd. Right, so this is now actually getting uncomfortable, Euro odd. So this is a perfect example. So Euro odd, this is an ADR extension trade, right? So the ADR extensions that I'm running are quarter of an ADR. So we had an ADR push to the upside, entry, quarter of an ADR entry, quarter of an ADR entry, parabolic, no entry opportunity, no entry opportunity, no entry opportunity. That's the next one I could get in. So we're getting in now with what? 1, 2, 3.5 lots. Yeah. So my average price, as you can see here, is now at 125 ADR. The goal is to keep this within 100 ADR. So it's to keep it there. So what you would do now in a real world example here is I would be looking to get in. Let's do it properly. Euro odd, I have 3.81 lots on. All right, there. Yeah, so I've got 3.81 lots on. So what I would do is basically look to get roughly 1.7, which is about half of that back on. So you could go 1.8, you could go with 2. But you're going to wait for this to give you a signal. So at the moment, what I'm doing is I'm sitting here going, there's an M pattern. We're at 150 ADR, massively extended on the hourly and the 4 hourly. Yeah, so if I get in now with a 1.7 short, and I'll do it just to demonstrate what happens to the average, you will see what effect aggressive drawdown control has. So let's mark this up where the average is now. There. Yeah. And I'll enter 1.7 short.
Thanks for the follow.
Come on. Why? Yeah, okay. Well, I don't know why that's come up with that. Okay, it's got lots of confirmation on it. Yeah. So now you can see the average has jumped from there up to there. So I've moved the average up by over a quarter of an ADR, and we are now within 1 ADR. So that's spot on. But because this is such a high risk trade and a large lot size, we're not just going to leave this in the market as it is now and hope that it comes down. If this doesn't come down from here, I don't want to take this position into drawdown, because that is just going to exponentially make my problem worse. So what I need to do is place this with a stop, which I'm doing on a VPS, so it might be a bit jerky, but anyway. So sticking a stop loss on it. Oh, God. Got order confirmations turned on this. Sorry. Okay. Yeah. So my risk there on that trade is 357. So it's 0.35%. So all I'm going to lose is 0.35% on this move. Yeah, my target for all of these trades is somewhere in the region of $300 to $500, right? So all I'm doing is using a normal stop loss. So the chances of this now going up and hitting that area are 6%, aren't they? Because we're already extended to 150 ADR. So the chances of it getting beyond 175 are actually quite small. So if this now comes down and we get that climbing up the stairs, falling down the elevator shaft move, yeah, and we're on the, M5 time frame here. So, M5, if we get a move like that happening over an hour, yeah, I'm almost out at break even. But what I can do now is two things. I can either, if this moves down to here, I can go, phew, haven't lost, haven't made. Or I can close this position off in total and take the profit. So let's work it out what the profit is. So I can say I will take the profit of, this is going to ask for confirmation. Let's say we go down to here, yeah? Yeah. So I can take a profit of $962. Yeah. And by the time we get down to there, I'll be at zero. So I can close off $962 in profit there. Yeah. And then what I can do is look at these positions and say, right, this one is in a loss of X. This one's in a loss of Y. This one's in a loss of Z. So I will take some of that $962 and I will use it to close that position out completely. And let's say, for example, that is a $500 loss. So I will bank $462. Thank you very much. It goes green. And I will get rid of $500 worth of loss. So I'm still in the trade with those three positions. Now my average, because I've closed that out, will have jumped down to somewhere like that. So I'm actually pretty much back to my average price. So all I need now is maybe a half ADR push to exit the whole position. Or I can hold on and be a hero and hope we come down for the propulsion gap fill with the whole lot. If it gets down to there, I'll be banking somewhere in the region of 2 to 3% profit on the entire position. Yeah. So those are the options you got. But that's how you do it. Every single aggressive drawdown control position has a stop loss. If this fails and this pushes higher, fine. I wait for the next opportunity. So we go up, we come out, we analyze, we look, we see where are we going to stop next. I can't do it on this. I'm going to do it on my other platform, EuroOdd. Yeah. I'm going to do it on the other platform, right? So this is our trade. We've got in. If this aggressive one doesn't work and we don't get the propulsion gap fill today or tomorrow, and it pushes up further, I will be doing the same thing. I'll be in drawdown, fine. I will scale out and I'll have a look at where we're off to. So I've got to go scale out quite a way on this one, haven't I? Daily chart. Where's the next levels? Here. So that is where I would look to enact my next aggressive drawdown control position. Now, don't forget, if you're using the EA will probably be still getting you into positions as you go as well. So you will still be scaling into it. Yeah, but that is my next entry there, which is from where we are now, 200 pips away, which is 1 3/4, 1.5 ADR. So if this aggressive fails, we stop out, we push up, comes down, we get another position short. Yeah, and if that doesn't work, we push up, we get aggressive, or we get aggressive on the next reversal. Entirely up to you how you execute it. I've been in drawdown. I'm just trying to think. It was Aussie New Zealand, wasn't it? Just before Christmas, I think. Yeah, so I was enacting aggressive drawdown control here. I got in here, entered, had an exit at break even with 3 positions or so, and I didn't take it. I thought, yeah, this is it. We've just gone a little bit further and we're going to get the bounce. I didn't realize the fundamentals had shifted, which is one of the reasons I built the dashboards. But we then started to push back down. So I got in again. By the time we were down here, I was like, right, I need to get out of this. So I went aggressive here. It pushed, I got out, exited, and then we collapsed. But I was out and it took an aggressive position. Now, what could have happened was I could have got into aggressive and it did that and pushed down and stopped me out and carried on. So I would have had to get an aggressive there. pushed down, stopped out, and then eventually at some point you have to take a loss. In fact, I think this one, I'm trying to think now, this one might have been the one I took the 9% loss on, and I didn't actually get out the aggressive. I can't remember. Takes so many trades. But yeah, either way. But yes, does that make sense? That's how we do it. So as it says here, there are 3 outcomes. The options when you take an aggressive position like I've just done is the market reverses as we expect and we exit with no loss. Yeah. So what we were hoping to happen when we took the aggressive trade happens, it plays out, we exit, happy days. Yeah. The other option is the market reverses and we bank a nice profit, i.e. it goes boom and we go, thank you very much. So the aggressive one that we were targeting there just flies and we make a load of money, or it continues against us and we carry on doing aggressive drawdown control. Don't forget, when we're doing aggressive drawdown control, you only ever do an aggressive entry when the market is massively extended. I will not take an aggressive entry unless we are massively extended on RSI or we are extended on ADR. Yeah, so if something is squeezing against me, nice and orderly like that, is not hitting RSI extensions, is not hitting ADR extensions, I will just let it go, because those will tend to just fade back into rounded bottom market cycles like this. Yeah. If something is going bang, 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 these entries, one of these will be a profit take. And that's the ones you get in. And this is why we monitor ADR, and this is why we use the RSI. Yeah. Because we know when we get an RSI extension, we're going to get that profit take move the vast majority of the time. So I've got an example here in the slides as well. US dollar yen. Well, the ones I've just given you are probably better because I've just done it live, which is nice. But let's look at the US dollar yen example. So this is one that I had in drawdown at the time. So you can see here we've got the positions on. So I had a 0.3, one there, I had another 0.3, and a 0.4 there. So I've probably scaled out some of this on the way. So there's the average price, as you can see. Yeah, and the market has hovered around, pushed down, and then it's flown up on a parabolic move. So this is an ADR. Yeah, so I'm thinking, right, the market is extended here already. We've got into an accumulation, we've dropped on the thing, and now the RSI has got extended and parabolic again on an ADR. We've got propulsion gap targets to the downside to also get filled. We've got all these old propulsion gaps that haven't been filled. Look. Yeah, so this is where we get in with our aggressive. We take an aggressive drawdown control position here when we get a reversal alert, and we put our stop above the high. And in this case, it worked and it came down. So the average price went from here and jumped all the way up to there. Bang. Yeah, so in this instance, the ADR, and actually that's an ADR reading from where price is there, so that's not right. ADR would have been different over here, obviously. So. But you see the difference it makes. The aggressive drawdown control positions, the purpose of them is to drag that average closer so that you can reach it. Yeah, it's like someone dangling a rope and they're dropping the rope a lot further into the hole so you can climb out of it. That's what the aggressive works as. And at the end of the day, if it doesn't work, it doesn't work. You just take a stop. And at any time, don't forget, you can scale out of this and take losses. Yeah, your P&L is not going to be green all the time. You're going to have losses in there. Yeah, look at this drawdown control position working now. What was I in? 2.8 on that a minute ago. I'm in now 2.5. We've knocked 0.3. We've knocked a third of a percent off. Yeah, look at that. When that suddenly gets up to $500, $600, all these are going to be smaller. So you can start scaling out of these. So as that becomes, let's use this as an example. Let's say this aggressive drawdown control works. This becomes $800. Yeah. This becomes, as this has gone down, this becomes $500. This one becomes $400. This one becomes $400. I have an option now to bank this completely, remove that, and now I have two positions on in drawdown. This one is in profit by 300. This one is in negative by 500. So I'm negative $200. which is absolutely nothing. And what I've done is I've made absolutely nothing, but I've taken the pressure off. There's no pressure at all. I've banked nothing. But what I've done is I've just got out of this position, which was in 2.8% of drawdown. And now I'm sitting in a 0.2, which is roughly 0.15%, something like that. Yeah, it's gone. The pressure's gone. I'm not bothered anymore. And that's what it's used for. But it's also used in a lot of instances, which is not what we're meant to be doing, obviously. But if this thing now comes screaming down like that, pulls back, and I'm not watching it, I'm downstairs making a cup of tea, or I'm get chatting to the wife, half an hour later I come back up and we're down here, that thing is sitting in 3.5% of profit. I will just go, thank you very much, bank it. Or move the whole thing to break even and lock a bit of profit in and go, screw it, let's go for the home run. That hits that, that's 8%. Remember that oil trade? Don't know if any of you in here were in here before Christmas. I took an oil trade, took an aggressive drawdown control position on an oil trade, and it went mental, it flew. And I banked something like 8% profit off of it. My target was to get out of the thing because I was in drawdown and in pain. What I ended up doing was actually banking 8%, 8 grand. Pop. But that wasn't the intention, but it will happen when you take these aggressive drawdown control positions. So there's a good example of it, and how the averages jump around. Okay. This is the next part of the course, which we're not going to go on and talk about martingale. I'm basically talking about martingale to explain why you don't do martingale. Yeah. And the reason that slide leads on from this one is because the usual question is, well, you're just doing martingale. No, martingale would be going in, blow. Yeah, I'm not doing anything but getting into a normal sized position trade with a stop loss. That's the difference, the stop. Yeah, we're using a non-stop loss strategy and we're converting ourselves into a stop loss strategy when we get into trouble. That's the purpose. Okay, so that's aggressive drawdown control and how to get into it. There we go. Hopefully that was helpful. And hopefully this will be helpful on this Euro odd. Right. So markets basically. Oh, look at that. I shouldn't have got out, should I? Shouldn't have got out. I did. I was too scared. But there you go. There's a really good... This afternoon's been a really good learning experience because we've seen absorption in the market, understanding how the absorption works in propulsion moves. We've seen them play out. We've seen aggressive drawdown control done live. We've seen Powell upset the market. What an afternoon. I'm knackered. I need to go and have a whiskey. This thing's still dumping, still wicks to the upside. Look. How are my positions getting on? More importantly, 196, I'm still in it. Euro odd is still thinking about coming down. Euro CAD back down in the green. Target is propulsion on that one, $80. And Aussie New Zealand. Oh, look at that. Oh, that's the wrong stop loss. That's the stop loss for that one. That's the stop loss for that entry. All going the right way. Pound odd, CAD yen, both working as well. Oh, God's sake. Oh no, that didn't take too long to update that one. So CAD yen short at the minute. Propulsion target. We've got that propulsion gap at support. So I'm looking for a break, basically. Michael, my uncle is a doctor and he recommends a book by Mackenzie method for trapped nerves on shoulder and neck.
Thanks for the follow.
Thanks for the follow, whoever that was. We've had a few follows this afternoon, haven't we? We need some more thumbs up, by the way. We've only got 31 thumbs up. We've got 64 people in here. We've had 100 in here today. We've only got 31 thumbs up. Pandu, welcome aboard. Setomba, oh no, Setobama even. And Amar Rimang, welcome aboard. Mackenzie method for trapped nerves on shoulder and neck is a form of exercises, and he has treated many patients. Mackenzie method. I shall Google it. For a physio, right, okay. I'll have a look at that a bit later. I've got a physio appointment on the 16th, so there's a video as well. But yeah, it's usual with the NHS in the UK. They book you in for something a year in advance of when you know. I've had this now for 5 weeks, coming into 6 weeks. And the drugs are getting on top of the pain. It's now like a 3 out of 10 pain all the time instead of was a 10 out of 10. I was on the floor screaming in agony type pain. So the drugs are working, but it's not going anywhere. So anything I can look at, I'm interested in. Anybody still in the Dow or the US indices? I'm really wishing I'd have held that Dow position, but I didn't. Never mind. If you got in the opening range breakout on the 15-minute today, you are in serious money. I'm going to check my account in a minute because I think I've got one. It's on the other VPS though. Yeah. Jesus. I had a long on the US dollar CAD. That's just hit TP. Literally just hit TP while I was talking about the drawdown control. Very nice. Sorry, I've covered up the chat now with my other MT4. So, is it a bad thing to get into trades that are 1.3 times your initial or last trade? No. Up to you. I use, on some set files, I use lot multipliers, which you will see here. So, if you look at, let's have a look at one. Here we go. Aussie US, is that here? No. Aussie Swiss, no, they are all the Aussies, isn't it? So let's go to the Aussies. How's the rest of my Aussies? Aussie Swiss. Yeah. So I'm using a 1.3 multiplier on this. There, look, lot size multiplier. Yeah. So this is that slide we were just about to go on to covers this in the bootcamp, but it's multipliers, lot size multipliers. Obviously, if you put a 2 in there, you're trading martingale. So if you get in with a 0.01, the next trade is a 0.02, the next trade is a 0.04, 8, 16, 32, explosion. Yeah, that's what happens with martingale. With this is what I call a hybrid martingale system. With a lot size multiplier of 1.3, what you're doing is when you're getting into a trade, you are getting in extended conditions. What we often find is that we don't get the right entry on the first one. The second one, a lot of the time, is the right one. And if that isn't the right one, the third one is. When I start getting to 4 to 6 positions, something has gone fundamentally wrong with the instrument that I'm trading, in the fact that I've missed an exit somewhere or it's been an accumulation drop, which you can't do anything about. So by using a 1.3 multiplier, what that does is it ever so slightly increases your lot size, but gradually. And what it does is it keeps the average a little bit closer. It's not too aggressive. Yeah. But what it does is I'll show you the average on it, which will make sense. I should really put the average in the EA, shouldn't I? But anyway. So what I find the 1.3 multiplier does is it keeps it a little bit closer within the ADR. So you've got a 0.6. Is that a point? No, that's not a 0.6. That's a 0.89. 0.89, 1.29, 1.68. Yeah. The other thing the lot size multiplier helps with is conditions exactly. This is absolutely perfect to explain it on, is conditions that go parabolic on you. So when you have a parabolic move against you, yeah, what you'll find is the entry that you take, the next entry that you take will be way further away than the previous one. And there's nothing you can do about it because there's no signs of strength at all until we get down to here and we get a reversal alert down here. There was no reversal alerts in here or here. So there's no signs of buying pressure. So we're not getting in the market, obviously. Or if they were, they become too close. So what it does is if you get in too far away, that multiplier keeps the average closer. So you can see the ADR is there, that's there. If we get into another one somewhere down here, the ADR is going to drop down to there, which gives us a really fast entry. So I don't have a problem with that. But what I would say is if you're going to use a lot size multiplier, also use drawdown control. Yeah, so you can see here, I've taken a $118 loss there on the Aussie US. It's scaling out on the Aussie US trade, this one here. It's doing automatic drawdown control on that position. So, Aussie US. So this is the H1, no, this is the H4 M5 or M15, whichever way you want to run it. I'm running it on M5 at the moment. Yeah, so it's doing automatic drawdown control by scaling out of the positions. So if I drag that trade there, Aussie US onto there, yeah, you can see the initial position taken there is 0.57 plus 0.24, which is 0.7 something, whatever. Now we've got a 0.75 there. That becomes a 0.75 on the next entry, keeping the average very, very, very nice and close. Yeah, so there's my average. So normally if you take in exactly the same lot sizing, what you'll find is your average will be exactly in the middle. By scaling in with slightly larger positioning, the average is slightly closer, which gives you that faster exit. On a parabolic move, on any move now that comes to fill this propulsion gap, I'm out. But I'm out because of the slightly larger lot size, bringing the average down closer to my position. So it's up to you. The set files work with or without lot size multipliers, but only use lot size multiplication if you're getting in with a small size. So 0.02 for your initial entry, sorry, not 0.02, 0.2% or 0.25% on your initial entry. Yeah, so you're risking 0.25% of your account on a half an ADR move against you, or rather against you in that way. Yeah. If you get in with 0.5% on your initial position, yeah, by the time you've taken 3 positions, you'll be in something like 3.5% drawdown. The next one that goes against you is going to take you into 5%. Before you know it, this will be spiraling out of control. The reason people get into massive drawdown and get into trouble is because they get in with their initial lot sizing too large. Yeah. So my initial risk is 0.25% of my account on half an ADR move. So when I'm getting in, it has to move half an ADR against me. And at that point, I'm literally only in 0.25% drawdown on that trade. Half an ADR is a big move. Yeah, an ADR is a big move, isn't it? An average daily range is a large downward move against you, likely to take RSI fairly extended. By that time, I've got 0.5% of drawdown in my account. It's nothing. It's very comfortable using a 1.3 multiplier with anything up to sort of 4 to 5 positions. Then it starts to get a little bit like, might need to do some aggressive drawdown control, which we just covered. If you don't want to do aggressive drawdown control as fast, don't use lot size multiplication, and you won't have to do it as fast. Oh, look at this. This is the sentiment EA, the new one. $2,700 banked today. 1,300 open. I could bank that now, another 1.5%. It's nearly a 5% day, look. Given it is a big day, but it's a big day, isn't it? We like. 150 ADR New Zealand US, still coming down. Right. How do you work out the average? I don't. I use an indicator. ME break even. Where is it? There. ME break even line. It automatically does it. It draws it on the chart for you. It's on the website. Go to indicators, other indicators and template. And it's in there. It's in there in the zip file. Break even line. Or Google. There's loads of break even line indicators out there. But you don't need to calculate the average. Quick look at Euro New Zealand. You're in heavy loss. Okay, so Euro New Zealand. So what? Why are you in heavy loss? Where have you got? You're short on it, obviously. So I'm guessing you're short from here. How are you in heavy loss? You've obviously got in maybe on an hourly. So did you get in? You maybe got in there as an initial position. So if you are in heavy loss, we are 162 pips away from where I can see probably the only place you would get into an initial position would be. That's only one ADR. So you shouldn't have any more than 2 positions, maybe 3 at a push on this. Yeah. So if you're in heavy loss, something's gone wrong with your positioning, your position sizing or the spacing on your positions. I can't see how you would be in a heavy loss. 171.857. How can you be in heavy loss? It's less than an ADR. It's just 79 pips. You can't be in a loss on it. You've got one position. Well, you're not in a heavy loss, are you? You're in a trade. I don't know what you mean, Christian. I'm lost. You can't be in a heavy loss. If you're short this, you're in a trade, aren't you? It's just in drawdown, isn't it? But so you got in there, I guess, didn't you? You're in a position. So your second entry will be somewhere up there. If you're in, I don't know, I can't understand how you're in a heavy loss. You're in a trade, one trade, yeah. If I'm in one trade, I can't. It's physically impossible to get into a heavy loss on one trade. Yeah, look at this. I've got one that's in 0.6% of drawdown. You are either over leveraged massively, or in which case then I mean just go back. If you've done the boot camp, you need to go back and do the boot camp again. You shouldn't be in a heavy loss. You're in a trade. You should never be anything more than 0.5% of drawdown there. Got to be over leveraged. Yeah, 0.01 per 1,000 in your account. 125 on US dollar yen. Went too heavy. Right. Well, yeah, if you went too heavy, you went too heavy. I would scale out of some, maybe. Take a loss. There's a couple of things that could happen here. So you got 2 levels of resistance. Yesterday's high and last week's high. So there's a high probability you're going to get some limit orders triggering there and there, or both. If it pushes on beyond that level, you're going to be hitting ADR, which is a high probability of getting some kind of pullback. You've got a propulsion gap, which has been tested, which may get retested. You've got a propulsion gap down here, which has been tested. That one hasn't. So there is a chance of this coming down from there, but I don't know what to say. I mean, if you're over leveraged in it, maybe you should have used a stop. But you shouldn't be in heavy at all. There's nothing I can do to help you really if you've gone in too heavy. You've gone in too heavy. Lesson learned, don't go in too heavy. The reasons people get stuffed is they go in with too large a lot size on their initial position. Your spacing is too tight. Yeah, so you're getting in like that, whereas you should be getting in like that. Or I don't know. That's the main reasons. They're the two main ones. Or you're just getting in the wrong place. You know, someone's going short down here. Yeah, that's not a good idea. Can you explain your market reverse alerts, EA? Lesson learned indeed. Yeah, sizing, exposure, spacing. There you go. Diamond is still in the house, very quiet, sitting there. Sizing, exposure, and spacing. So if your exposure is like this, and you've gone in with normal lot sizing, you will be in trouble. If the Australian dollar does that, you will be in massive pain. Margin call is the next step. Yeah, basically your broker will shut your account out for you. But yeah, it's not. But you've got. I mean, you've got a very good resistance coming up. So you're likely to find resistance there. You like to find limit order triggers. I would. You know, we've just been talking about aggressive drawdown control. Yeah, drop down to M5. And wait for some signs of weakness to get in. I mean, you're not far away from that entry, are you? Really? Yeah, or stick some more money in the account, but if you've gone in too big, you've gone in too big. Euro odd, wasn't it? Okay, so this aggressive drawdown control position we were looking at. Yeah, it's just pushing up at the minute. So you see as well with this aggressive position that I gave it a decent amount of room. Yeah, so I'm letting it play. If it wants to come and take that liquidity, fine, do that. I'm giving it room to move. Don't get in with an aggressive drawdown control position there and put your stop. We know the whole reason we don't use stops, yeah, is because of stop hunts. Don't be that person. Give it room. Don't give it too much room because you've got to get in with a decent lot size, but you've got to give it some room to muck about. Not going to just go, oh, he's gone aggressive, I'll just drop. Sometimes it does. Most of the time it does, to be honest, if you're taking it at the right level. Algo Cats, 0.8930. I will short EG hard. Sorry, the person that asked about the EA, I'm not going to go through the whole EA. Yeah, go to the website. I'll put the link in here now. So if you want me to go through the whole EA, I will basically reel off what's in this video. This video is 2.5 hours long. If you want to know about the EA, there's the link. Everything you need is in that video. It explains system, strategy, and it looks like somebody's also done the, yeah, so someone's also done that to it. Who is this person? They've done all my videos, whoever they are. Thank you for that, whoever you are. But you can go to like, boom, straight to the EA dashboard and stuff like that. High, low, max settings. Really good. It's all there. on that video. I'm not going to go through it because I got to go to sleep tonight at some point. Euro pound. Yeah, so Euro pound is a nice ADR, lovely extension, lovely resistance coming up. All these Euro pairs are ready for some kind of pullback. We've got extensions on ADRs on a lot of these Euro pairs, got RSI extensions on them as well. So Euro pound is obviously just got extended on the hourly, and it's an ADR hit, so potential short opportunity. There's no real targets though to the downside. So whenever I look to get into a trade, the first thing I'm thinking is where are we going? What is there to drag this market back down again? Yeah, look at the propulsion gaps and how they act as magnets. Yeah, whenever we leave one of these behind, we come back at some point and we grab it, right? Where is there a target downside for you there? There isn't. This one here has been tested. This one here has been tested. This one here has been tested. There is no downside target. There is an upside target, which hasn't been tested. And there is a high to test. So it's not the best trade in the world because I've got nowhere to go at the moment. I will do when this candle closes on the hourly, I will, because a propulsion gap will appear here in 25 minutes. If we haven't done that, this will become a propulsion gap. So if it pushes up, then I would get in, maybe. But just because there's no target doesn't mean it's not going to do that. I have absolutely no clue, as you know, which way this is going. No one has. But yeah, Euro pound does look good for a mean reversion, definitely. 89.30. So you're getting in above 125. But I would say, you're obviously not using the reversal alerts indicator. What I would say is, rather than picking a level, pick a time when they start to sell. Yeah. Let's say you all got 89.30 as your I'm getting in there, right? What if this does that? Yeah. If we get to 89.30, monitor for a reversal alert. When they give a reversal alert, i.e. the sellers have started selling and stepped on board, that's when you get in. Don't get in because you hit a level. Get in because there's a reversal alert, because there's strength in the other direction. Yeah, this is what this is for. This is a signal indicator. It's signaling that the guys that you want on your side have started. Jump in with them. And if you don't jump in with them now, jump in with them when they do their second leg. In your case, it will be an M. But it still looks good from an extension perspective. And obviously that is a lovely level we identified. So they may not take that high. It's old. Yeah. Anybody that's not got out on that propulsion move from there is an idiot. So there's not any liquidity there. There might be a little bit, but if you haven't got out in 2 weeks after shorting from there, you're nuts. You deserve to be taken out. Unlikely. So liquidity run is not going to happen, but there will be limits probably sitting there. So you get limit order triggers. So you might not even get above that level because the limit orders will be sitting below potentially and you never get there. Yeah. I am only playing with a 1K account to learn, but more than happy to add more funds to implement your way of trading style. Yeah, so as Ocats has just said, go and watch the bootcamp. If you're playing, in inverted commas, with $1,000 account or £1,000 account or whatever, I would say stop playing and use that money either in prop or put more money in and position trade it. If you want to play with a demo. Not with real funds. ADR on the Dow. No targets to the upside. Look how clean this has been traded on the way down. Yeah, they're selling and they're not interested. There's no propulsion moves in there. That's orderly, buying and selling on the way down. This is really bearish. So we will talk about this tomorrow, but who's up for a continuation in the bear market now? Yeah. All these people calling the bull market. I'm not sure. This dollar is getting strong. I'd be very, very skeptical about sticking my EA back on to start longing this. I'd be much more interested in shorts. We will see over the coming weeks. Right. Try to Christian, try to manage the trade before funds. Yeah. Yeah, try and get out first. Don't just jump in with more money. If you jump in with more money, all you're going to do is you're going to spend that money. Yeah. There's a statistic which you might not know. 90% of traders lose 90% of their capital within 90 days. Yeah. So if you deposit $1,000 in 90 days, in 3 months' time, we'll be talking to you with $100 in your account. If you are in drawdown now and you put another $1,000 into that, we will be talking to you in 90 days with $200 in your account. Yeah. It takes years to become a professional trader and learn how to do this profitably. That is the statistic that you will be sitting in for the first couple of years of your trading career. So trade demo or trade prop, because you will have lucky runs and prop will pay you. Does the reversal EA give signal in 1 minute? If you want to, but no, I wouldn't bother. Colonel Willies. Willies. Oh, it's just Willies, isn't it? With an IY. Yes, you can use it on the 1 minute chart if you want to, but I would rather go and run in front of a bus. If you're trading the 1 minute chart, you're just trading algorithmic chop. There is absolutely no edge to be found on the 1 minute chart at all. In my professional opinion. And the opinion of everybody I know in this industry that makes money and doesn't touch anything lower than the 1 hour time frame. But if you want to use it on the 1 minute, it will work. It will work. But it will work. Like I say, the EA will work in the fact that it will take trades for you. Those trades, however, I don't think will work. But it's up to you. Try it. Get it. Download a demo. Yeah. If you want to try the EA out, just go and download a demo. Yeah. Whatever platform you're on, 4 or 5, go and hit the free demo button and go and play with it in the strategy tester. Won't hurt. Just use it in the strategy tester and see if you can get it working on the 1 minute chart. I've never tried, and the testing will take you forever. If you're testing on the 1 minute chart, you will be testing for a long time. Just don't do it. Trade a time frame that actually has structure and not random chop. There's people using 30 seconds, yeah. Futures market, 100%. Futures market, I have tick charts. So I trade off of tick charts. They're not even based on time. They're based on the number of ticks in the market, the number of orders, yeah, the number of clicks you hear in tick strike. So when we've got 50 clicks, we build a candle. Yeah, futures fine, because futures we're trading per tick. We want to gain X number of ticks in the market. That's not how it works with CFDs, especially with position trading. So yeah, anything above 5 minutes. 5 minutes is a scalping time frame. 5 minutes though, I mean 5 minutes and 15 minutes, you're still trading to a certain extent intraday chop. This is a really bad example today because everything's gone mental, hasn't it? So, but you know, you're trading 5 minute chop. You're going to get a lot of signals. The lower the time frame, the less reliable signals are because the more of them you have. So you trade a high time frame, you get your trade idea from the high time frame, but you execute on the low time frame. So what we're looking at Euro New Zealand now, we're saying, right, this is a lovely short because we're expecting to make a lower high, for example. So I want to go short on this. So what I will do is I'll drop down to the 5-minute time frame and I will wait for a structure break to the downside to enter my trade. But my trade is the hourly chart. So I enter on the 5-minute when I get the structure break, but I manage it on the hour. I'm trading the hourly time frame with a 5-minute entry. Again, that's all covered in the bootcamp. Multi-time frame analysis, there's a whole day on it. Not the whole day on it, but this is all about multi-time frame analysis and elastic band theory. And everybody, I've now put the chapters on, look. So you can go, oh, I'm interested in rubber band theory. Ta-da! Oh, here's Greg Secker to ruin the day.
What's really exciting about
look at my mansion.
Is that last night I took my whole team out. We went running, wild swimming, and then we finished the day in our little trading den in there. And I showed them how to make.
I take my whole team to Centre Parks because I haven't got as much money as Greg Secker. Anyway, that will take you to the part of the video that teaches you about.
The next thing we're going to discuss is elastic band theory.
That. This is or whatever you want, yeah. So it's all in there now. You can. They're all chaptered, which is lovely for the person that did that for me. Right, that's all I got for you today. So I am managing these positions. We're going into profit nicely on Aussie New Zealand. So this is an RSI extension, ADR extension trade. Looking for propulsion target back up in here. One exit there, one exit there. I got a Euro CAD short and a Euro odd short. And an aggressive drawdown control position short on Euro odd. And again, got TP down at break even, and I will deal with that when it gets there, if it gets there, obviously. And I've got running on the fibers, pound odd and CAD yen. God, MT5, I hate you so much. CAD yen, yeah, which is just in profit, and pound odd. Short. And all I'm doing is targeting propulsion. I think this can come down. I think this can come down and just keep going down. It's the pound. It's not going to stay up there. But not greedy. Don't get greedy. Don't get greedy, get profit. Oh, that's a good saying, isn't it? Might use that. Don't get greedy, get profit. That's going to be my sign-off every day. What's wild swimming? I have no idea. I guess I'm not going to say. I want to get sued. I don't know. Greg Secker's adverts are very, very high quality. He must have a team following him around, just constantly videoing. But you know, this is what I mean when I keep saying these course sellers are all about selling the dream. He's out in a lovely house, or he's next to his jet, or he's next to his Rolls Royce. He's standing in front of his collection of Rolexes. He's in his trading den with a monitor that costs $25,000 or something. That is not paid for by trading. That is paid for by education. He sells courses and software and has a brokerage, as far as I'm aware. He probably does trade as well, and I'm sure he does. He used to work for banks. Of course he trades. But, you know, you don't get all that out of trading, do you? He's employing a lot of people. He's been selling courses for 20 years. So they must be good. You know, but who wants to invest $5,000 in something you can get on YouTube for free? You know, it's just, I don't get it these days. There's too much education out there for free. Who is Greg? Oh, Colonel, if you don't know who Greg is, don't worry about it. Honestly, who is Greg? You obviously haven't been trading for long, have you? the more you watch trading videos on YouTube, you will find that Greg Secker and Nirav and the guy from WB Trading will haunt you all over your Facebook and all over YouTube. You will get their adverts coming up virtually on a daily basis. It's not often I can click, if I click on any one of my adverts, my trades. Oh, this is the other guy. He's just started appearing in the last week, Minotaur Trading. He's got the #1 trading bot that passes proper valuations, which they don't want you to do because they don't like EAs that pass proper valuations. This guy suddenly started. But if you, after a while, you will find and you will see that the same old guys are coming up over and over and over and over again. I'm not going to get any more ads now. I've hit my ad limit. They're not going to do any more. But you'll get the same old guys coming up. It's all good fun. Probably naked swim party in his mansion. That's what I was going to say, Big Papa, but I refrained myself from saying it. Love it. Anywho, I'll leave it there today. Back tomorrow morning, 7:50 for the London session, and obviously back tomorrow afternoon for New York at 2:20. Don't get greedy. Get banking. I've just made a new one up. There you go. So yeah, I'll be back tomorrow morning. If you need me, I'll be in the Telegram group. And if you need anything to do with the EA's indicators or strategy, obviously I'm in there all the time. Otherwise, you can ask in the live rooms. And if you've got any parts of the bootcamp you want going over, let me know and I will do that. And I am planning to do much more of them. It's just I haven't had time to put the list of stuff together. So it is in the progress, but as I'm spending 6 to 7 hours a day streaming now, it's hard to find time to do the rest. So anyway, I will get onto that. All right, have a good one. I'll be back tomorrow morning, same time. And if you need anything, let me know. Otherwise, I will see you then.